So the S&P 500 and the NASDAQ have really been in the same place since the beginning of March. They have been consolidating up here. This is the NASDAQ. If you take a look at the S&P 500, since the beginning of March, it has really been basing here at the top, looking like a distribution pattern or the beginning of a distribution pattern. Now, before I get into what are the top 3 stocks that I'm looking to buy right now that I actually did start buying into before I created this video, we're going to give you an overview of the market in and of itself. You guys know, if you've been following my channel, I did start selling stocks towards the end of February, beginning of March. Now, it wasn't because of just a hyperbolic reasoning that the market is up, so it must go down, right? It wasn't just this frivolous idea that the market is overextended, but it really had to do with the fact that we were at peak rates, and I've seen the behaviors of how a stock market behaves right before a recession. Now, as you know, I am not trying to predict exactly when a recession will be here. As a matter of fact, I do think it is a few months away, if not an entire year away. Like I said before, nobody has predicted a recession accurately, but based on the history, based on what I know about the Fed funds rate, based on what I know about bonds, how gold trades, how oil trades, and how the stock market trades right before a recession, I was comfortable trimming some of my midterm positions towards the end of February, beginning of March. So we actually had a very similar situation here in 2006, where the Fed funds rate hit the same exact Fed funds rate that we have now, 5.25%, June 29, 2006. And it wasn't until a year and a half later that the recession officially started. Now, the last rate hikes in this rate hiking cycle were actually in July of 2023. You could see here, July 2023, same exact Fed funds rate. And we are now almost a year later, not quite a year later. And the stock market looks like it is basing with these peak rates as the inflation data continues to come in hotter. Inflation is proving to be a formidable opponent here, as the Fed is trying to battle inflation, bringing it down to their target of 2%, but it is being stubborn here. Now, we've talked about the reasons why inflation continues to be stubborn at these levels, because you are trying to incrementally go from 3% to 2%. And it looks like there is enthusiasm as inflation is getting better, because we were once at 9%. So once it nears that 2% target, then you have more of a risk-on effect in the market, where money managers, whales, investors, retail, etc., start investing back into the market and back into these risk-on assets, thereby causing a significant rally, even though the Fed has not reached their target of 2%. This is not the first time it happened, and these types of effects are the reasons why I was comfortable offloading some of my swing positions towards the end of February, beginning of March, even if the stock market can continue higher. And I think it can. And there are certain things that I am excited to buy here. Very few. I will talk about the top 3 things, the top 3 stocks that I'm looking to buy right now, the top 3 stocks that I'm buying right now. Now, the first one shouldn't come as a surprise to you. It is Tesla. Tesla, the only stock in the Mag 7 that has actually had a losing year, and not only a losing year, but one of its worst starts ever, almost down 40% from January 2024. So today, I'm up almost $4,000 on Tesla. You'll see the screenshot somewhere here. And I finally sent out a Tesla alert in the Traveling Trader Academy. Make sure that you guys are following me there to get all of my real-time alerts. I gave you Celsius at 49. I gave you IWM last November. I gave you TLT and TMF as well last November. I gave you the SPY at 410. I gave you Bitcoin at 39K. If you use the code in the description below, it'll be $99 a month for life. Usually it's $125, so make sure you join using that code. But here is why I'm bullish on Tesla from a technical perspective first, and then I will give you the fundamentals. From a technical perspective, it is rather easy to read. Tesla does create a lot of fractals. Fractals is just a fancy word for repeating patterns. If you see here, Tesla does significantly create these, or routinely create these, ascending channels, ascending wedges, etc. And a lot of times it actually continues in these ascending channels and ascending wedges. However, when these fail and when they gap down, Tesla does usually see a lot of violence. So we saw that back in October 2023 when the rest of the market actually rallied from this point. Tesla started tanking. And then we saw this now in March 2024, where Tesla broke below its ascending wedge and gapped down as well. Now, if you take a look at the volume profile visible range, I showed you how to use this tool before. This basically tells you at what price Tesla sees the most volume for a specific time. If we drag it all the way to the recent lows at 102 that it created in January 2023, you can see that this is the last volume shelf for Tesla, right? This is the last stand here. You have most of the volume actually occurring at 254 up here with this point of control, but this is the last of it, right? So right around here, I'm starting to get really comfortable with Tesla's prices. Not only that, but we actually do have bullish divergence between price as price is making a lower low. And you could see that the RSI here is making a higher low. This is called bullish divergence. Also, when Tesla's RSI hits in the teens, that usually signifies the bottom. It has only done this, I think, 3 times in history. And every single time Tesla has gone on to see a monster rally. Lastly, like I said, Tesla does love to move in fractals. So if you see this gap down here, the first time that it gapped up, back in November 2023, that's when it started its monster rally all the way up until December 2023. We now have that gap up with today's price action as it is up 6.4%. Part of the reason that I'm up on my cash secured puts, $4,000 on Tesla. Now, from a fundamental perspective, I posted this on my Twitter. By the way, follow me on Twitter and Instagram for daily free trading and finance content. I post almost daily on both of those platforms, a ton of free content. But I said that Tesla's quarterly PE ratio of 38 is the second lowest in history. Its EPS of 4.3 is the highest in history. So EPS is earnings per share. PE is price divided by that earnings per share. So if we take a look at it here, this EPS, this earnings per share of 4.3 is the highest that Tesla ever had. And its PE ratio, once it was above 1,000, if you remember when Tesla was very highly priced, but its PE ratio comparatively to Tesla's history is actually really cheap. This is the second lowest in history. The last time that when it hit its lowest in history, Tesla was bottomed out at 102, but its EPS wasn't even this high. So I'm comfortable relatively with Tesla at these prices compared to how it usually trades, right? Its highest EPS ever and its second lowest PE ever. Now, one other thing from a fundamental perspective, deliveries are expected to decelerate notably in 2024 due to the challenging macro environment. We already knew this, so this is already priced in. This is something that they discussed in their guidance, in their earnings calls. However, shifts in macroeconomic cycles are inevitable and they affect all players, not only Tesla, meaning that all players will decelerate comparatively, right? So it's not like it's only affecting Tesla and Tesla's fundamentals. The crucial factor here is the ability for the company to weather the storm. With $29 billion in cash and much lower debt, Tesla's financial position provides it with the opportunity to continue financing all the strategic plans without the necessity to raise additional finance. So I agree that in this case, in this sort of macroeconomic environment, buying a car company might not be the smartest thing. However, based on how Tesla normally trades, based on the fact that it is much better positioned than its competitors in terms of its cash and in terms of its debt obligations, if I am going to buy a Mag 7 stock that historically trades very expensive, I don't mind doing it at one of its cheapest moments in history, even though the outlook in the short term is not great. But we are talking about long-term investing here, and I don't mind that price for the long term, especially because everything else is inflated. So am I really going to buy the S&P 500 here when I'm already starting to think of trimming? No, I'm not. Am I really going to buy Microsoft here, more Microsoft here at 419.30. Am I really going to buy more Meta here at 496.19? No, I'm not. Now, second stock that I actually got into was Apple. Got into it at 170, currently trading at around 175. I still think it could actually drop a little bit more, but you guys know my rules. When we hit 50% of the previous rally, then typically for a blue chip, I think that that is a good buy point unless there are major concerns. And also in this case, Apple was down 15% when I bought in, getting a 15% discount on a mega cap tech stock, right? And if we pull this volume profile, visible range, if you pull it all the way back to exactly 2 years ago, you will see that the point of control is right here around 173, where the most volume was. And the last few times that Apple reached this point, Apple rallied significantly because there was a lot of buying at that level. Now, historically, you might say to yourself, well, this might be a little bit of an expensive price for Apple. Matter of fact, why don't we just jump into its technicals right now? So if we pull up Apple here, let us see what its current valuation is. Let's see what its current growth looks like, etc. So Apple's valuation, if you look at it, it's actually pretty cheap compared to not only the rest of the sector, but compared to the rest of the stocks in the Mag 7. Apple's PE ratio is only 26.89 compared to the sector median of 29.55. And I'm not even going to look at, well, why don't we take a look for shits and giggles at NVIDIA, which is currently trading at 73. If you take a look at Meta is currently trading at 32, almost 33. If you look at Microsoft, it is currently trading at almost 38. So Apple relatively cheap compared to its Mag 7 partners at 26. But realize this, Apple is also one of the only tech stocks that hasn't yet seen an AI boom. So Microsoft has seen an AI boom. NVIDIA certainly has seen an AI boom. Meta has seen an AI boom. Google, which we'll talk about in a second because we ended up buying this at 131 and went up 14% in just a couple of weeks. But Google is now seeing an AI boom, right? So Apple's AI story is not yet written because we don't know what the hell Apple's going to do. But we know from experience that if somebody is really an expert at entering the market and entering the competitive landscape, especially in technology, it is Apple. And if you take a look at Apple, Apple has quietly bought 30 to 35 AI companies in 2023. So it is definitely at this point getting serious about AI, but we don't really know, besides the Apple Vision Pro, which so far is the best VR AR headset on the market, right? By a mile. And that is just the first iteration. Obviously, it's going to get better from there. But we don't even know what they are thinking about with regards to AI, with regards to creating subscription services with AI. There are some reports that they are going to be partnering with Google's Gemini AI engine as well for iOS 18. I mean, we have no idea what they're going to do with generative AI, right? And their stock price is currently priced just as if it is just Apple that is selling its flagship products. We have not yet seen the AI boom in Apple. So at the 50% retracement mark, 15% down from highs, I am okay buying Apple here and will likely add some more Apple if it gets below 160, which is where we typically have seen the last volume shelf. If I drag this all the way back to exactly 2 years ago, as of the time of this recording, you see that there is quite a bit of volume between actually 162 and 170. So if we get to 162 or below, that will be my next buy on Apple. But, it is mostly because of the fact that its generative AI story and its AI story at large hasn't yet been written. And lastly, what I'm looking at are the Bitcoin miners. You guys know how I feel about the Bitcoin miners in general. The only time that I really invest in Bitcoin, not invest, but even trade Bitcoin miners is when they are decoupled from Bitcoin, which in general, they are usually perfectly in line with, right? But when they have a massive decorrelation with Bitcoin, and this is due in large part to the fact that the halving is coming up, the Bitcoin halving is coming up. So it's going to be twice as hard for miners to actually mine Bitcoin, which means that they're going to be half as profitable. This is now taking shape in the form of this decline in price and the decoupling with Bitcoin. But as we've seen in the past, this will tend to resolve itself. This is now already priced in. And when I see Bitcoin miners almost perfectly decoupled from Bitcoin, and I expect Bitcoin's price to rise in the midterm, which I do, and we'll talk about that in a second, then for me, it's time to sell some puts on Bitcoin miners. In this case, there's Riot, there's Clean Spark, which just started its decoupling from Bitcoin. And there is Marathon Digital Holdings. There might be a couple of others too, but those are the main ones that I'm looking at. And Marathon is now also decoupled from Bitcoin. So when the Bitcoin miners are correlated with Bitcoin almost perfectly, there's almost no asymmetrical bet to be had there. But when they are almost perfectly decoupled or decorrelated, and you expect Bitcoin's price to rise, then historically, if you take a look at it, that is usually a good time to buy the miners. When they are decorrelated with Bitcoin and Bitcoin's price rises, you tend to see these huge moves in the miners. So we are now seeing that decorrelation once again. And I already started selling puts in Riot and thinking about potentially buying leaps here, or buying shares, not sure yet. But this is all really based on my assessment of Bitcoin going back to all-time highs. So if we take a look at, or not going back to all-time highs, sorry, making new highs. So if we take a look at Bitcoin here, you could see, let me pull up the halvings. These yellow lines here are the Bitcoin halvings. And the Bitcoin halvings means that it is now going to take twice as much work in order to mine Bitcoin. You tend to see Bitcoin have a rally at minimum of 775% after the halving. Sometimes it's been in the thousands. So after the May 2020 halving, we've seen a 775% price hike. After the 2016 halving, we saw a 3,900% price hike. After the 2012 halving, we saw a 23. Actually, no, wait, this is incorrect. We saw a 9,900% price hike, right? So these halvings tend to have an astronomical effect on Bitcoin's price. So with that decoupling, I do want to take advantage of the next hiking or the next price hiking cycle in Bitcoin's price. And with the miners currently, down 40%, almost perfectly decorrelated with Bitcoin, I think it's a good opportunity to start in those. Now, I just want to say that the positions that I take on the Bitcoin miners will likely be midterm, right? Short to midterm. I'm not looking to invest in these. I think they're actually terrible investments. And I would much rather invest in Bitcoin on retracements, which I do own a lot of Bitcoin, but that's for another video. But these are just trades to take advantage of enormous price action in a short amount of time. So I'm hoping that after the halving, we will tend to see, like after the last halving, this is Riot, it rallied 3,700%. If you take a look at what it did after the halving in 2016, it rallied 1,600%. So I don't even need that much in terms of gains. But, I do want to take advantage of these Bitcoin miners rallying price after the halving takes shape, because this decline that you see here before the halving starts to get priced in. And then these miners end up ramping up their operations and are now mining even more expensive Bitcoin as Bitcoin's price exponentially increases. So hopefully you got something out of this. The top 3 stocks that I'm buying right now, I hope this helped you. Let me know in the comment section if you agree, disagree. What are you buying? What are you excited to buy here? Have you sold your stocks? Are you waiting on the sidelines because you were scared out of buying this whole time, which would actually suck? But I would love to hear from you, your different positions, what you think about the stock market currently. What are you excited to buy? Like I said, in my opinion, there is not much value here. I do think there are a couple of other things which I will likely talk about in other videos. But, already making a killing on Tesla, already made a killing on Google. And these are just some of the other things that I'm looking at here. While the stock market is trying to base and potentially form a distribution pattern, really depends on what happens with the macroeconomic situation. but happy to have taken some profits off the table here. So let me know in the comment section. Also, make sure that you join us. Use that coupon code in the description below. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.